สวัสดีค่ะยินดีต้อนรับเข้าสู่การนำเสนอข้อมูลของบริษัท PSL Shipping นะคะ PSL สำหรับไตรมาส 4 2020 แล้วก็สำหรับปี 2020 โดยคุณคาริด ฮาชิมกรรมการผู้จัดการจะนำเสนอในเรื่องของข้อมูลของอุตสาหกรรมและตามด้วยคุณกอตัม คูรานานะคะกรรมการทางด้านการเงินก็จะนำเสนอข้อมูลในเรื่องของตัวเลขทางการเงินผลการดำเนินงานและในช่วงสุดท้ายในเรื่องของคำถามคำตอบซึ่งก็สามารถที่จะส่งคำถามเข้ามาทั้งภาษาไทยภาษาอังกฤษได้นะคะขอบคุณมากค่ะขอเชิญคุณคาริดค่ะ
สวัสดีครับ We will do the presentation as usual in two halves. On the first half, we'll talk about the industry structure, and in the second half, we'll talk about our finances. So on this slide, we're showing you how the BDI has been progressing. If you look at this point here, this is when COVID hit. If it had not hit, the index would have gone up at this point like this. Instead of that, the index came down. And then once China came out of the problem in June, you can see how the index went up. Thereafter, when the world had the second wave, index came down. And then again at the third wave, the index came down. But each time the index bounces back very nicely. This shows you the 3 years, 2020, which is over here. 2016, which is the bottom line here, and 2009, which is the one on the top. So we've selected these 3 years because 2009 was after the GFC. 2020 is with COVID, and 2016 was the year when we had the lowest market. So you can see that 2020 is in between these 2 years. Now, what's happening this year is that we expect supply to grow by about 1.84%. And last year, despite 1 quarter of recycling not being available, scrapping went up for the year by 84%. In terms of China's growth, it has been an amazing year for 2020, with iron ore imports increasing by 9.3%, coal increasing by 1.5%, steel production increasing by almost 6%. If you look at steel imports, went up by 64%. And if you look at the steel consumption, was up by 8.21%. So quite an amazing year from China. Another way to look at China is to see that the GDP growth numbers do not necessarily tally with what's going on in terms of imports and exports. If you look at this slide, it shows you the growth in trade, which has taken place in 2016. 17, 18, 19, 20 is still an estimate, and 2021 is a forecast. You can also see how the fleet has changed. The world fleet has grown by 2.4% in 16, 2.9 in 17, 3.36 in 18, 3.88 in 19, and 3.84 in 20. Now we are expecting, according to Clarkson's, 1.7% growth. So these numbers are all from Clarkson's tables. If you look at this slide, it shows you just the minor bulk. And in the minor bulk, you can see that growth has varied between 1.6% and 5%. And last year was down by 3.06%, but this year is expected to be up by 5.41%. Similarly, if you look at the growth in supply, it's been fluctuating somewhere between 2.5% and 4.5% over the last 5 years. But this year, it's expected to grow by just 0.8% in the smaller size sector where we are located, that is ships which are between 10 and 70,000 tons of size. These are the cargoes that PSL has been carrying over the last 5 years. Yeah. And you can see that we are not really focused on any one cargo, but we have a lot of cargoes that we work with. If you look at the net growth in supply over last year, it's 3.84%, and that amounts to 33.56 million deadweight tons of additional ships. Keep in mind that the average world fleet is now 10.71 years of age, and if you were to look an average of the Supras and Ultras, it would be above 11 years of age. These are the forward order book. The forward order book is right now at the lowest point that it has been over the last 25 years. If you look at the total order book, it's 55 million deadweight tons, of which in the smaller sector where we are located, there's only 14 million tons of ships, or roughly 4.4% of the existing supply. If you look at the bigger ships, it's at 41 million deadweight tons, and that works out to 7% of the existing supply. And you can see that quite clearly in the bar chart. So these are the smaller ships and these are the bigger ships. If you look at our calculations for the growth, net growth expected this year, you can see that we have arrived at 1.84% by applying slippage, which is very similar to last year, and assuming that 16 million tons of ships will be scrapped, because last year 15.1 was scrapped and they missed out 1 quarter of scrapping. If you look at the order book figures and try and compare that with the existing overage ships, what do you see today? You see that the fleet is 907 million deadweight tons. Order book is at 55 million tons or 6.07%. And the current existing 20-year-olds at 6.2%. That is, they are larger than the order book. The order book is all the way to the end of 2023. So if you look at the 20-year-olds up to the end of 2023, you can see that you're comparing a forward order book of 6% versus an existing overage fleet of 10.65%. Similarly, if you look at the handy-size sector, 110 million tons of ships, forward order book 3.64 million tons or 3.32%, existing 20-year-olds 13%, and like-for-like 17%. So here you can see that there should be an actual shrinkage of the fleet. As a result, we expect this sector to do really well, and some of the cargoes that they cannot carry will come into this sector. So if you look at the Supramax, what do you see? You see 212 million tons as the total fleet size, 10.5 million tons on order, or under 5% of the order book. And if you look at the existing 20-year-olds, 8.25%. And if you look at the fleet like for like up to 2023, then there's 13.6%. Again, here also it appears that there should be some shrinkage in the fleet and not any real growth. So what are the challenges during COVID-19? So if you look at the challenges that faced us, demand was curtailed due to lockdowns in the first half of last year. Quarter 2 2020 was lost to recycling because of lockdowns. Crew repatriations were almost impossible. Capital markets were frozen. Banks were no longer willing to lend to ship owners. Bullet portions were not being refinanced. Owners had to help themselves. And Maersk, as an example, decided to let 2,000 employees go despite declaring a 8.5 billion type of Ebitda number. So what did we do at PSL? We did not lay off any staff. We did not reduce compensation for anyone. We diverted ships at our sole cost to complete crew changes. We brought the Sainty arbitration to an amicable end and received $40.5 million on the 29th of July last year. As a result, we have been saving about $3 to $5 million of legal expenses and management time. We gave a discount to one of our close clients on ships that were on charter to them, which had been idled due to the lockdowns. We amended both our outstanding bonds by 18 months, paying 20% principal upfront, increasing the coupon by 150 basis points, and getting the option to redeem part or all of the outstanding bonds at any time prior to final maturities. We got one of our clients to remit 1 year charter hire in advance. This has never happened before in the shipping industry, so this is a good feather in PSL's cap. This time it is different. And why is it so? So we've compared the year 2009 after the GFC, 2016, which was the worst year in shipping in memory, and 2020 with the COVID Black Swan event taking place. So we've taken Cape sizes just to show you the real differences that were there. So you can see clearly here that at the start of the year in 2009, the Cape sizes were averaging a time charter rate of $9,000 a day. By 2016, it had come down to half that level. And in 2020, it was above that level. And as you can see in 2021, at the start of this year, it's been a very strong start to the year. If you look at the low point, it was the start of the year in 2009. It came down to just $2,000 by the 17th of March in 2016 and was again at the similar level by 14th of May in 2020. But if you look at the month of January, where we had the data for, it was the start of the year. If you look at the high point, 2009 had a $93,000 type of number. But just keep in mind that in 2008, this number was $234,000 per day per ship. It came up to 19,500 by the 17th of November in 2016, a really slow, gradual climb. And then if you look at 2020, it went up to $35,000 a day, a very nice, healthy number by the 6th of October. And in January itself, it's gone from $16,000 to $26,000 by the 13th of Jan. If you look at the end of the year number, for 2009, that number was $37,000 a day. For 2016, it had dropped down to $10,000. For 2020, it was at $16,400. And if you look at the end of Jan, it was at $17,700. So a really good start to the year. What were the fundamentals that were impacting each of these years? So if you look at 2009, demand shrank by 3.36%. However, the Chinese government came in with a massive steel-intensive stimulus of $578 billion. At the same time, at the end of this year, the order book was at a staggering 81%. And net fleet growth during the year was 9.25%. If you look at 2016, it was a year characterized by a slow growth in demand of 2.1%, no Chinese stimulus, so that was a big loss. And at the end of the year, the forward order book was almost 18%, so quite high. And net fleet growth for the year was 2.4%. So therefore, if you look at this, you can understand why the year was not so good. If you look at what happened in 2020, Clarksons still are not sure whether the growth rate in 2020 was minus 2.19% or plus 0.5%. And they've given a big explanation here, which we've copied down for you. The Chinese government, on the other hand, by the end of May, announced a $667 billion stimulus plan, 16% higher than what they showed in 2009. As a result, the second half of 2020 was strong. If you look at the order book to fleet ratio by the end of the year, it was at a 25-year low. And if you look at net supply growth for that year, was quite high at 3.84%. Now let's look at 2021 on the fundamentals. Clarkson says that ton-mile demand growth will be at 4.36%. DNB markets, on the other hand, says this will be as high as 6.7%. If you look at net fleet growth, Clarkson's forecast 1.7%, DNB forecast just 1.5%, and our calculations show 1.84%. So this year should be a very strong year for dry bulk. If you look at the numbers just for January, then you can see clearly that Capesize has earned an average of $21,000 a day, which was 171% above January of 2020. Similarly, if you look at Panamaxes, it was up by almost 100%, and Supramaxes up by 90%, and Handysizes up by 71%. So January has been a very strong year. I can tell you that right now, if we were to see the analysis for the same thing for the month of February, these numbers would be higher here, and higher here, and lower for the Capesizes. So Capesizes have been coming down, whilst Panamaxes have been going up, Supramaxes are going up very strongly, and so have Handysizes been going up very strongly on the benchmark indexes. So what are the key takeaways from what I've shown you so far? The first key takeaway is that the markets continue to recover, but in a very volatile way. China successfully reopened its economy in 2020, but negative impacts in Q2 and Q3 were from the second wave and third wave of infections in the rest of the world. Governments and central banks have pumped about $18 trillion of monetary and fiscal stimulus into their economies. Rates have improved in Q3, Q4 2020, especially in the Atlantic Basin. Global capital markets remain frozen. Healthcare professionals have improved their understanding of the virus and how to treat the disease. Vaccine developments, with at least 3 having crossed the finish line in 2020, and Johnson & Johnson now applying for early approval this week. They should be getting it, or next week. So that should make a big rollout of vaccines, making normal economic activity coming into play by the middle of this year. So far, our expectations of a first half weakness, second half strength in 2020, and then strength in 2021 and 2022 have been vindicated so far. So COVID impacts, 19's impact. So if you look at the impact on cruise lines and car carriers, you can see that cruise lines were burning anywhere between $250 million and $1 billion per month. Carnival Cruise posted the largest shipping loss in history of $4.4 billion in one quarter. The total so far in the first 3 quarters is a loss of $8 billion, and they have raised $19 billion between March 2020 and the end of the year just to stay afloat. Up to Q3, there were multiple bankruptcies in the cruise space. Wallenius Wilhelmsen, which is the largest car carrier in the world, reported a $285 million loss in Q1 because of demand destruction. But by Q4, they were showing a profit of $47 million for that quarter. If you look at the container lines, this is one of the places where supply management played a critical part in their coming out and becoming one of the best years they've had. First half profits surged by 160% compared to 2019. The largest intelligence firm, Sea Intelligence in container shipping, predicted a $23 billion loss for the whole year in April, and now is forecasting a $14 billion combined profit, making it the greatest turnaround in fortune in the 64-year history of containerization. Global container trade was down by 1.85% totally in 2020 compared to 19, but this year it should be at a higher level. Maersk, as I said, is making 2,000 employees redundant despite making an actual $8.3 billion Ebitda for 2020. So dry bulk has shown a loss in first half and a recovery in the second half. China has led a recovery in vessel earnings in second half 2020. A stimulus of $667 billion, 16% higher than the GFC stimulus, has helped demand recover in the second half of 2020. Coordinated fiscal and monetary stimulus of at least $18 trillion will keep demand very strong in 2021 and 2022. So here is the breakdown of the monetary and economic stimulus that we have seen. So what is our strategy? Our strategy is to try and take advantage of this market and remain on the spot market for the major part of this year, and sometime towards the end of this year, early next year, to try and lock in ships on longer term contracts. So the fleet remains the same, 36 ships. Average age is 9.3, so we're younger than the average age of the world fleet and certainly much younger than the average age in the sector that we operate in. Average size of the ships is 44,000. This is our forward book of long-term contracts. So in the long-term contracts for each year, we've shown you how many days have been locked in. So these are the days that have been locked in, or in percentage terms of the total fleet, these are the percentage terms that have already been locked in. And they've been locked in at what rate level? At this rate level. So you can see this rate level here. This is what has been locked in. And if you multiply this lock-in rate with the number of days here, you come to the total forward book in cash terms. What does it mean to us in revenue terms? In terms of market segmentation in Q4, we've shown you the size of our fleet. We've shown you the size of the index fleet. And we've shown you the speed consumption for the index ship. And we've shown you the speed consumption for our ships. So you can see clearly that our ships are not exactly similar. It's not apples and apples comparison to the index ship. So despite that, you can see that we only lost 10% compared to the index ship in Q4 for the handysize. And for the Supramax and Ultramax, we lost 7%. If you look at it on an overall year basis, we actually beat the index, despite the fact that our ships are not exactly apple for apple with the index ships. And similarly for the Supramax and the Capesize, Ultramax ships. If you look at the historical performance on an annual basis, there's a question like this already put up in the Q&A, and this answers that question, that shows you our performance compared to the index. And this should be our actual index level for the Supra and Ultramax fleet, and this should be our level for the handysize fleet. So compared to the actual benchmark that we should be looking at, we've really outperformed all of that. And even at the index level, we more or less outperformed every year. Coming to financials, Gautam will take you through the rest of the slides.
Okay, so the COVID-19 had quite a major impact on us, particularly in the second quarter of last year. So we took a couple of steps to strengthen our balance sheet to ride through this crisis. So first off, we entered into a 1-year advanced time charter agreement with one of our customers for 5 ships that are on long-term charter. That brought in gross hire of $26.55 million. The proceeds of which we used partly to repay loan 4.85 million and partly to redeem our bond PSL 206A, which was about 19.71 million. We also, of course, extended two of our bonds, PSL 206A and PSL 211A, both by 18 months. We agreed to an increase in coupon of 150 basis points. We also agreed to make redemption payments of 20% at the initial maturity date. Since then, we have also made additional redemption payments for PSL 206A. In fact, we have paid back most of what is due. We have only about 330 million that will be due in March. We've already agreed to make an additional payment of 330 million on 12th of March 2021. On PSL 211A, we've also paid back 20%. The outstanding on that is 2872 million. I expect that we will pay back quite a bit more as we get through this year. We have the right to pay back in part throughout the year. Thirdly, we had a long-standing arbitration with Senti Shipyard in China. We agreed to a settlement agreement whereby we brought in 40.5 million. So this reduced the 67.5 million that was shown as an advance to shipbuilders. We took a non-cash loss of 27.4 million. So this shows you the operating expenses that we had in 2020 relative to 2019. Overall, the figure was 4705 per day, which was below the target of about 4750. This looks at the operating expenses on a quarter-by-quarter basis. The first and the second quarters, we couldn't really effect too many crew changes, so therefore the manning expenses figure you will see was quite low. The crew changes were backloaded in the fourth quarter, which is why the manning expenses shot up to 354 million in the fourth quarter. We also had slightly higher repair and maintenance expenses and also stores and spares expenses. This is why for the fourth quarter, the number went up to 5,067. But overall for the year, 2020 operating expenses were actually lower than operating expenses in 2019. This shows you the operating expenses of PSL versus the industry average. You will see that we are substantially below the industry average. Now, just to understand this, so every $1,000 of decrease in operating expenses translates to basically a 10 million additional profit. So the lower that we can be on a consistent basis against the industry average, the better it is for us, the more competitive we are in the market. This is the financial profile for the last 6 years. At the end of 2020, our cash and cash equivalents position was 36.6 million compared to 39.2 million in 2019. Total assets was down to 712 million from 831 million. This is down mainly because of depreciation of the ships that we have, but also because we had entered into a settlement agreement with Senti, and so the advance to shipbuilder figure that came down. Our net debt also decreased from 352 million to 281 million. Equity was down from 383 million to 337 million as a result of the loss that we took on essentially because of the Senti settlement agreement, but also because of the operating losses. We suffered operating losses, particularly in the second quarter of last year. Our net debt to equity figure was 0.83 compared to 0.92. The number of ships that we own has remained constant, 36. Ebitda, mainly because of the low markets in the second quarter, was down to 36.3 million compared to 44.5 million in 2019. Debt to Ebitda, that was at 8.4 compared to 8.3. And the lower Ebitda is, of course, because of the lower daily earnings per day per ship, which came in at 8332 versus 9622 for 2019. Daily operating expenses down to 4705 compared to 4778. Net profit for the year, or rather net loss for the year, was 40.8 million compared to a loss of 7.2 million in 2019. Total revenues for the year, 119.9 million versus 135.3 million in 2019. This is again showing us the revenues on a yearly as well as quarterly basis. So if you look at the fourth quarter of 2020, our revenues were up to 34.3 million compared to 30.55 million in the third quarter, but below the 38.28 million figure in the fourth quarter of 2019. Our net profit for the quarter before extraordinary items was 0.9 million compared to a loss of 0.71 million in the third quarter and a profit of 0.87 million in 2019. The Ebitda was for the fourth quarter stood at 13.79 million better than the Ebitda in the third quarter, which is 11.12 million, and even better than the Ebitda in the fourth quarter of 2019, which was at 13.3 million. The average time charter income per ship per day was 10,022, higher than the 8,786 figure in the third quarter, but below the 10,628 figure in the fourth quarter of 2019. Again, so we're looking at the financial highlights, the financial position. So I just talked about the advances to Sainty were showing up on our balance sheet at 64.12 million at the end of 2019. This went away after we entered into the settlement agreement. Ships net came down to 634 due to depreciation. Long-term loans, which is secured amortizing loans, that came down from 237 million to 207 million. Our debenture exposure nominally, before taking into account cross-currency swaps, came down from 182 million to 126 million. Total shareholders' equity came down from 383 million to 337 million because of the losses. The book value per share in Thai baht was 6.5 compared to 7.41. Return on equity was minus 3.67 compared to minus 1.82. Total liabilities to equity was 1.11 compared to 1.17. This shows the average age of the fleet. The top line shows the average age of the fleet from 1995 to 2020. You will see from 1995 until about 2011, the average age of our fleet was about 15. Thereafter, we embarked on a new building program. We ordered a number of new ships. So therefore, the average age of our fleet shrunk. In 2016, it came down to 5.8. It is now currently 9.3. This red line over here shows the average dead weight of each of our ships. So previously, our ships were much smaller. They were about 19,000 dead weight. And then we ordered new ships, much larger ships. So the average dead weight of our ships increased to 44,050, which is what it is currently. This line shows the average time charter rate per ship per day. So in 1995, the market was actually quite good, and at that time, the rate was 7,300. Then we had the Asian financial crisis. The rates came down to 4,808. And then we had the super cycle driven by China's demand primarily. And so therefore, you saw the average rates go up to 14,000 in 2005 and a peak of 16,489 in 2008. And thereafter, oversupply of ships caused a decline in rates. The bottom the worst market was 2015 and 16 when we saw rates of 6,200 to 6,400 levels. Ever since then, fundamentals have been improving and rates have been improving. 2018, rates were quite good, 11,000. 2019, there was a accident at a dam in Brazil, which caused rates in the first half of the year to decline. So therefore, the average rate was 9,600. 2020, of course, as we know, is when we had COVID, and so the rates came down quite a bit. Operating expenses have been fairly stable, moving with inflation. This was a higher figure because our ships were much older. Of course, the ships are much younger now. This shows us the debt and debt to equity ratio over time. We had a fair amount of debt when we back in 1995. We paid it down to zero back in 2007. And then we embarked on a new building program. We took on more debt, and ever since then, it has been coming down, as has been the debt to equity ratio. And we expect it will continue to go down over time. This is the debt to Ebitda ratio. Debt to Ebitda ratio was at 4 to 6 level initially, and then it came down as we paid down our debt to zero. But this is also a function of vessel age, because debt is related to a vessel's age. So as we have younger ships, when we started to buy younger ships, the debt increased. And so therefore, the debt to Ebitda also increased, and it is moving down since then, and we expect it will continue to move down. This shows the cash operating profit and the operating profit. You will see that there's very few times in our history when the cash operating profit has been negative. It's just 2 years. Otherwise, it's always been a positive cash operating profit. This shows the net profit and the cash profit. So we had some quite good years during the last super cycle, which was from 2004 to 2009. And ever since then, of course, markets have been under pressure, but they've been recovering slowly. This shows our dividend history over time. Our policy is to pay not less than 25% of net profit as dividend. Markets have been weak over the last few years, and therefore we haven't paid out dividends, but it is fully our intention to start paying out dividends once markets sustainably remain strong. This shows the shareholder returns from the time of our IPO in 1993 to 2020. If you were an initial buyer of our share at the IPO, you would have got 11 times your money back. So that works out to a 16% annual IRR. Thank you.
So now we'll walk you through the Q&A. So the first question is that when the Baltic Supramax Index and Handy Index increases or decreases by 1%, how does this affect PSL's freight rate? They are not correlated directly, so it's very difficult for us to give you that type of a number. And then about the depreciation in 2021, I guess it's going to be similar to that in 2020. Our freight rate in 2020 will be lower or higher compared to the Baltic Handy Index and the Baltic Supramax Index. So here, if you see the comparison that we've shown you, you can make your own call from this. More or less, we should be at the index level. Some years we're slightly below the index level. Other years we are well above the index level. So that's what you should be expecting. Our freight rate in 2021 will our freight rate be higher or lower by how many percent? We don't make forward-looking statements, so I'm afraid I can't answer that. Is there any possibility of supply shortage like container ships? Container ships, because the top 10 players have 90% of capacity, they can afford to make those type of changes. In the dry bulk space, the ownership structure is so fragmented that there's no hope that we can ever do this. But having said that, today, supply seems to be less than demand. The demand for ships is much higher than what the supply is. And as a result, rates are going up quite sharply. What is our target to reduce debt equity ratio in 2021?
So let's say about 0.8. The target is to reduce it further.
Okay. Do you propose to issue any warrants to shareholders to maintain debt equity ratio? No, we don't have any plans for that as yet. Can you tell us about the utilization rate of all the ships? We do not disclose such information, so very difficult to answer that question. Any plan for new ships in 1 to 2 years? Not at the moment. Forward-looking statement for freight rates in 2021? We don't give forward-looking statements, therefore can't answer that. So this was the question that they wanted explanation in Thai.
ก็คือถามเรื่องแนวโน้มค่าระวางเรือปีนี้จะเป็นยังไงก็คืออันนี้มันเป็นเรื่องอนาคตก็เลยมันติดข้อกำหนดในเรื่องของตลาดหลักทรัพย์นะคะค่ะก็เลยจะไม่สามารถตอบได้ค่ะ
In the past week, BHSI and BSI have increased dramatically. What is the reason behind that? They're basically playing catch up. The rates actually went up 2 or 3 weeks before that, but the index did not reflect it. It's something like the LIBOR index. So LIBOR is determined by a few banks sitting together. Similarly, the indexes in shipping are determined by brokers sitting together, and many times the brokers are not allowed to disclose the rates that have taken place in what they know of, where the clients have kept it in a confidentiality clause. So they can't disclose it, but slowly that news is filtering into the market. Will the company benefit from this in Q1? As I said, please look at our results. Our results on a quarter-by-quarter basis may not necessarily be in line with the index. So say like, for example, in Q4, we were negative on both the index levels. But if you look at the whole year, we were positive for 2020. Therefore, you should not look, and we can't really predict on a quarter-by-quarter basis because it also depends when ships go into dry dock, etc. Any plans for new ships? None at the moment. How much is the impact to the company's operations if most nations extend strict quarantine for a few more years? Not real. I mean, look at the impact that we've had last year. We beat the index numbers. Yes, index numbers were low, but we managed to outperform the index. And remember that in last year, there was only one country that really came out with a stimulus, which was China in the second half of the year. As a result, second half was stronger. And if you look at the fiscal and monetary stimulus proposed by different countries, it's at the $18 trillion mark. Therefore, we expect markets to remain very strong. Demand anyways, according to Clarkson's, is much higher than supply. There was a time when voyage chartering ratio was on par with time chartering. Would we be able to see that in the future? Not really, because this is determined by the clients and we have no real control on this. And right now I would expect that the clients would only do time charter. What are your thoughts on scrubbers? Would PSL consider using scrubbers if the spread is high? We would never use scrubbers. Basically, scrubbers take pollution from the air and put it into the water. So we are a company that believes in being green and not polluting anything, neither the air nor the water. Does the company plan to increase or decrease the number of ships on hand? No, no such plans. Freight rate is highest in the past 10 years. Will this decrease the rate of scrapping? We don't think so, because legislation is going to increase the pressure on the older ships to scrap. So then we come to question number 14. You still have quite difficulty in balance sheet, but do you have any plans to buy new? No plans to buy new ships. Next question. Is there a reason why there is a shrinkage in handy-size and Supramax global fleets across the globe? Are shippers swapping cargoes to bigger ships? Do you think the current freight rates will cause order book to increase, and how fast in your experience? So the first question, all very good questions. Shrinkage in handy-size and Supramax global fleet is because owners really have no more money left in their pockets. Remember, we've had 9 years of recession. As a result, owners don't have enough capacity to buy anything. That's the first reason. Second reason is that new legislation is coming out with on the emissions of greenhouse gases from the ships. And until a new fuel is discovered and you can get commercially viable ships with that fuel, no one is really going to be ordering new ships. However, having said that, in the past, when markets go up, people go crazy and they do order some more ships. But so far, we are not seeing that at all, because second-hand ships are today much cheaper than brand new ships. Is there any plans for PSL to order or acquire ships? Not at this moment. Would you stick to handy, Supra and Ultra? Yes, absolutely. No bigger ships. Okay, then coming to 16, high fuel prices will affect scrapping. High fuel prices don't have really too much impact on scrapping or not. High fuel prices will not affect scrapping. They may affect the client's ability to absorb such costs, and they'll have to pass it on to their clients. Similarly, we would pass it on to our clients. This year financial statement will be better than previous year or not? Why? We don't give forward-looking statements, so we can't answer that. Will the company have net profit this year, and why? We can't give you forward-looking statements, but I would just say that why don't you please look at what's happened to us last year. We outperformed the index. The year before also, overall, you could say we outperformed. Similarly here, we outperformed. Similarly here. So you could say that we will outperform the index, and just follow the index ships and see where they are going. That will give you an idea as to whether we will outperform, whether we'll have a net profit or not. Forward-looking freight rates, no, we don't give that out. So far, we've not heard of many bankruptcies, because bankruptcies, if you hear about them, will be only from players who are in the who are publicly listed. So you can then get information. But the majority of ship owners are private, and so even if they're going bankrupt, we would not know about that. And there are some more questions. Are there a lot of financial? Okay, that's been answered. 21. How long do you think this upcycle will continue? At previous peak in 2008, what was PSL's TC rate? So I think we've answered the TC rates. It was between $13,000 and $16,000 a day in the last peak cycle. But remember, our ships are smaller, now our ships are bigger. Second thing, how long will this cycle continue? We are not God, we can't predict the future, but at least it looks like right now that this year and next year definitely should be very good. After that, it depends on how many more new ships are ordered and how many ships are being scrapped. If the ordering and scrapping is in line with each other, then there's no problem at all. We think that the market will continue to remain strong. With freight rates at a decade high, what are our plans to lock the rates? As I said, we will try and lock in towards the end of this year or early next year. Right now, customers are asking us for between 3 and 5 month type of trips and periods, and we are doing that. These are all short-term periods, and we're doing all of that. We expect the current demand to be front-loaded. demand for reopening, which will peter out rather than the norm going forward. No, demand is not going to be front-loaded in the year. Demand is never like that. Normally, the first quarter of the year is very weak. This is the strongest first quarter that we've seen in the last 10 years. So again, we don't think that this is following a normal pattern. Advance payment for those 5 ships. Can you guide the rate for us? What are these 5 ships?
Segment the in advance charter hire in advance.
Yeah, so the charter hire that we got in advance on the 5 cement ships so far was for 1 year, 4 cement ships and one Supramax. That was roughly $26 million. Which ships can we got engine breakdown? How long did it take to fix? We've not had any real engine breakdowns or anything that needed to be fixed. At the current charter rates, would PSL be happy to have everything fixed at the... Yes, if we could get today's current levels for the next 3 to 5 years or 7 years, we would happily lock in all our ships. Does bondholders, lender allow PSL to pay dividends in 2021? Dividend payment is a policy of the shareholders. If the shareholders decide at the annual meeting that there should be a dividend, then yes, that will take place. Management will recommend it if we are profitable and we are not in breach of any covenants. Are there any factors that will impact on BDI index? Just demand and supply of ships. There's more demand and less supply, we will have a higher BDI. If there's less demand and more supply, we will have a lower BDI. 30. I'm not sure. The debenture due in the total of 2,400 million, how will the company handle it?
So we're working on several refinancings, and those refinancings should be more than sufficient to repay the debentures outstanding, the amount outstanding.
Okay, question 31. What is your target net debt to EBITDA at the end of 2021?
We don't really have a target for net debt to EBITDA. We can't really comment on that. Again, that's forward-looking.
What is your target capex? Again, we have no plans for it. What is the lead time for shipbuilding and now say from order to delivery? About 2 years. What prevents us from having our fixed TC days for 2021 at a higher level than 17%? Does management anticipate an even higher rate as per seasonality post-Chinese New Year? Again, we don't make forward-looking statements, so really can't say, but all I can say is that Chinese New Year this year has had zero impact on the market. Therefore, for us to expect a bigger bounce after Chinese New Year would be unrealistic because anyway, there was no drop. If there was a drop, then you would expect a pickup after Chinese New Year. Are you tempted to take on more debt and build up the fleet further? Or are you considering loaning idle ships from other owners as an option? Or will the fleet stay at 36? The fleet is going to stay at 36 ships. And we will pay down our debt as soon as we can. What do you expect to be the similarities, differences between the rise in rates for container ships compared to dry bulk? Can't compare, they're completely different. They are both white. In the sense chalk and cheese are both white, but they're completely different. You can't compare the two. Similarly for container ships. Interest expense is quite high. I saw companies started to redeem some of the bonds, but can you give us the long-term view of the company's interest expense?
So actually interest expenses are down year on year because of lower LIBOR and also because we had a reduction in debt. I expect it to go down further as we pay down more debt this year.
And similarly for the bonds?
Yes, we will have more money. We expect we'll have more money to repay our bonds this year. Yeah, so that'll go down.
What is your shipping outlook on 2023 regarding IMO? Yes, IMO has a new law which is going to come out and which will be enforced from the start, 1st of January 2023. The law says it's called the Energy Efficiency of Existing Ships Law. It will force ships to operate at a very low grams of CO2 per ton mile of cargo carried. Now, right now, for the year 2020 that has just passed, our grams per ton mile of cargo carried has been at 9.84 grams only. This is quite amazing. So for us, for the next 3 years, 4 years, 5 years, we don't have any problems with the new law which will come in. But if you have very old ships, you will not be able to make that law. And then you'll be either forced to go at a very, very slow speed, which your clients may not want, because then the cargo will never reach, and otherwise it'll be a problem. if we lock rates at current levels, what do you see the risk of customers renegotiating if rates were to fall in the future? Remember, in the past, rates were even higher. We never had any renegotiations then. We don't expect them now, but we are going to be very careful with our counterparties. What are our plans for dry dock in 2021? How many ships? We don't give this type of details out, so I'm afraid I can't answer that. Are there any plans to diversify outside shipping like TTA? No. Would you consider M&A both in terms of buying out smaller players or offering large stakes to useful strategic shareholders? No, we've got no such plans. What is the implication of the lowest order book around 6% last year? This is what will make very few ships arrive in the future, and therefore it should help to keep markets strong. What is the company plan to repay upcoming bond maturities this year and next year? I think we've answered that.
Yeah.
Will we have a chance to get more new cement ship contracts? We are trying hard for that. It's very difficult. You need a cement company which is port-based. So therefore, they can load their cargo onto a ship without any intermediate handling. That becomes very difficult, and therefore it is virtually impossible to get that done. But having said that, we might get some more contracts as the years go by from our existing client in India. So with that, we've come to the end of the question answer as well as our time. So thank you so much, everybody. Sawadee krap.
สวัสดีค่ะ